Again, who are the income taxpayers? Your income taxpayers are individual, corporation, and in between are estate and trust. So I suppose I have already introduced you to taxation on income taxation on corporation and individual, but going further into details of corporation, you would recall the definition of a corporation states corporation shall include joint venture, joint account and participation, including partnerships, no? Partnerships except general professional partnership. Ano ibig sabihin nun? Yun ang medyo gumugulo sa murang isipan natin eh. What do we mean by partnership except general professional partnership? Okay, so let's now deal with that. So when it comes to income taxation of partnerships, partnership will be further classified as to whether it is an ordinary partnership or a general professional partnership. Okay? And there are 2 points of view to consider regarding their income taxation. 2 points of view to consider. In the point of view of the partnership itself, in the point of view of the partnership, and in the point of view of the partners, no? As regards income taxation of partnership, 2 points of view to consider. In the point of view of the partnership and in the point of view of the partners. Okay? So first things first, when is a partnership considered a general professional partnership? A partnership will be considered a general professional partnership if it meets two conditions. And what are conditions? To be considered a GPP, it must be all partners belong to the same profession. All partners belong to the same profession. And number two, the purpose of the partnership is the joint exercise of common profession. So that's the reason why you set up the partnership is to, among with your co-professionals, you will have a joint exercise in that partnership. So you set up a general professional partnership, all belonging to the same profession, and the purpose is to exercise common profession. That makes you a general professional partnership. So then, when should there be an ordinary partnership then? Well, any partnership other than a GPP is an ordinary partnership. Any partnership other than a GPP is an ordinary partnership. So now that we know how to identify when a partnership is as such, whether GPP or ordinary partnership, so the next question now is, why so? What is the relevance of the distinction whether ordinary partnership and general professional partnership? Ito ang dahilan. In the point of view of the partnership, a GPP, in the point of view of the partnership, a general professional partnership is exempt partnership. It is not a taxable entity. Okay? According to the law, our tax law looks into a GPP as a mere flow-through entity. Let's assume na, kunyari, ito si ABC and Company, no? Mga CPA yan. The fact remains na ito si ABC and Company na binubuo ni Partner A, Partner B, Partner C, okay? The fact remains na si ABC and Company is a person, separate and distinct from the individual professionals, individual partners. So they will engage into activity as a professional, they will have income as a partnership. So yung income will come into it. So it is a person, but the law would look into it, would see it as a flow-through entity. Butas-butas yan. Whereby the income will flow through it into the loving arms of the partners. Ergo, although the GPP is exempt from income taxation, but sir, merong income. Sino magbabayad ng income tax? May income. The individual partners will be liable with their share in the income of the GPP. So therefore, if you are a partner, how would you treat that? You will add it to your gross income profession. Okay? Gross income profession. And that gross income from profession will be subjected whenever there will be a distribution, it will be subjected to creditable withholding tax. Creditable withholding tax to professional, 5 and 10%. If exceeding 720,000, 5%. If not exceeding 720, 10%. Okay? So gross income, to the point of view of the partner, the share of the income in the GPP will be treated as gross income profession. So ikaw yung partner ng GPP, anong treatment mo? Isasama mo pa sa ITR mo as gross income professional. Gross income profession. Okay? Now, what about an ordinary partnership? Sabi ng tax code, section 20, section 20, 21, section 21 by definition, 22 yata. Section 22 as defined, corporation shall include partnership no matter how created. Ergo, ano ibig sabihin nun? Rules of income tax of corporation will also apply to an ordinary partnership. Therefore, ilalagay mo dito sa box na to, ordinary partnership, it is taxable like a corporation. Rules of income tax of a corporation will apply to it. Now, so if you are a partner in an ordinary partnership, since an ordinary partnership is treated like a domestic corporation, ergo, if you are a partner, you are also like a stockholder of a domestic corporation. So how will you treat your share in the income of the ordinary partnership? Edi subject to 10% final tax. If the partner is either resident or citizen. Pero kapag non-resident alien engage in trade or business, it will be 20% final tax. If non-resident alien not engage in trade or business, it will be 25% final tax. But my point being, share in the distributable income after tax of an ordinary partnership is subject to a final tax. So if you are the partner in the ordinary partnership, you no longer add it in your income tax return. Clear? You no longer add it in the income tax return because it was already subjected to a final tax. Clear? Yeah, thank you. Now, having said that, let us now proceed. And by the way, that concludes our discussion on income taxation of partnership. We now proceed to co-ownership. Income taxation of co-ownership. Income taxation of co-ownership. So when is there a co-ownership? Well, co-ownership is ownership in common of a single undivided property. To illustrate, let's say for example, merong isang property. Yan, isang parcel of lot yan. Okay? And assume further na ang may-ari itong si A. A who is a father. And A has 3 children. Si children A1, child 1, child A2, and child A3. What if A died without a proper last will and testament? Having said that, iisa lang ang ari-arian niya, mamanahin lahat ng anak niya, 3, yung iisang ari-arian niya. Ergo, because of his death, because of that inheritance, 1, 2, and 3 became co-owner of a single undivided property. What makes it a single undivided property is that they are not able to pinpoint what particular physical portion of the property belongs to whom. What they know is that pro rata, I own 1/3 of that. Si 2 owns 1/3 of this and 3 owns 1/3 of this. Okay? Co-ownership ang tawag dyan. What if it is like this? Itong portion na to, pag-aari ni 1, ito kay 2, ito kay 3. Is that still a co-ownership? Not anymore. Why? Because there are already 3 properties already subdivided. Hinati na nila. Okay? Maring Nagbayad na sila ng lahat ng mga transfer taxes, nailipat na nila sa kanila yung pangalan, pinaghati-hatian na nila. Hindi mag-a-apply itong issue natin. Dahil ulitin ko, co-ownership is ownership in common, several owners of one single undivided property. O sir, bakit nagkaroon tayo ng issue about income taxation arising from co-ownership? Kasi ganito, maaaring itong property na pinamana, nung tatay, maaaring the property is earning income. Say for example, ito palang lupang to, merong nakabaon na 10 pintong apartment. So yung apartment kumikita ng rental income. So yung isang property may income, rent income. So yung co-ownership may income. So ang tanong, sino? Sino ang magbabayad ng income ng co-ownership? Ang sagot, it depends. Because we would have to classify now co-ownership into two kinds. So we have to classify co-ownership into two kinds. So what are the two kinds of co-ownership? Number one, yung co-ownership with capital infusion. And the other one is co-ownership without capital infusion into the co-ownership. Co-ownership with capital infusion, and the other is co-ownership without capital infusion. Yan. Co-ownership with capital infusion and co-ownership without capital infusion. And there are 2 points of view to consider here. In the point of view of the co-ownership as a taxable person, do we consider the co-ownership as a taxable person? Or, and the other point of view is in the point of view of the individual co-owners. Okay? So inahin ko na yung co-ownership without capital infusion. Paano nangyayari yung co-ownership without capital infusion? Let's say for example, si 1, 2, 3, magkakapatid, di tinanggap nila yung co-owned property nila from their father as an inheritance. Ang ginawa ng magkakapatid, they are contented, they are happy on just collecting their share in the income, rental income of the property. Any expenditure that they incur are only meant for maintenance and upkeep. So gastusan man nila, maintenance and upkeep lang, tas kolekta lang sila ng kolekta ng income. So pag ganon, maintenance and upkeep lang, this is considered as a co-ownership without capital infusion. So ano ngayon ang tax status ng co-ownership? Ang status ng co-ownership, the co-ownership is exempt from income tax. Stated differently, the co-ownership is not a taxable person. But sir, there is rental income. May income, sir. Sino magbabayad ng income tax sa income ng co-ownership kung ganyan? Kung yung co-ownership hindi person, the co-owners will be liable with their share in the income of the co-ownership. So therefore, yung distributable income nila will be, yung distributable income of the co-ownership will be reported by the respective co-owners as their share and report it as gross income from business. Yan. They will report it as gross income from business. Tama, di ba? Kasi exempt yung co-ownership, hindi taxable person. Pero may income. Sino magbabayad? Di paghahati-hatian ng mga co-owners at kanya-kanya silang report sa kanya-kanyang ITR nila. Okay? Gross income business. Now, what if the situation... O sige, say hi, say hi. Hello. O sige. What if... sige. What if the co-ownership is with capital infusion then? What if the co-ownership is with capital infusion? Well, if the co-ownership is with capital infusion, anong ginawa ng magkakapatid, yung co-owner? Sabi ng magkakapatid, ganito, tinitigan nila yung property nila. Sabi ni Juan, Tol, tingnan mo itong apartment natin, laspag na, no? Dito din natin mapaupa ng maganda. Sabi nung number 2, oo nga eh. O sige, ganito gawin natin. Meron akong pera, 500,000. O, lapag mo dyan. Ikaw, di ba meron kang hardware, meron kang mga gamit, materyales, meron kang mga equipment. O sige, gamitin natin. O ikaw, Tol, arkitekto, inhinyero ka, o sige, gamitin mo yung talento mo, ipasok natin dito sa co-ownership natin para paayusin natin, mapaganda. Pag napaayos natin mas maganda, mas malaki yung paghahati-hatian natin. O, di ba? Yung mga magkakapatid nag-infuse ng capital into the co-ownership. Ano ngayon ang tax treatment pag gano'n? Alam mo, by doing so, whereby the brothers, the co-owners, have contributed money, property, or industry in this common fund in order to divide the profit among themselves. You know what the brothers did? They have unwittingly formed themselves to become an unregistered partnership. And an unregistered partnership is taxable like a corporation. So therefore, if it is a co-ownership with capital infusion, rules of income tax of a corporation will apply. What do we mean by that? It will be liable to RCIT, it will be liable to MCIT, as the case may be. Yeah. Because it will be seen by the law, it will be treated as a taxable corporation. Now, if you are the co-owner of a co-ownership with capital infusion, if you are a co-owner of a co-ownership whereby it is treated like a taxable corporation, how would you treat your share in the income of the co-ownership then? Like a stockholder, it will be subjected to 10% final tax or 20% final tax or 25% final tax, depende kung ang yung co-owner. Kapag yung co-owner, resident or citizen, 10%. Kapag yung co-owner, non-resident alien engaged, 20% final tax. Kapag yung co-owner, non-resident alien not engaged in trade or business, 25% final tax. Dahil gross income from all sources within the Philippines, 25% final tax. Do you follow? Mga kapatid, and that concludes our discussion on co-ownership. Okay? Pero ano napansin mo? May parallelism mo. Parallel sila. Pag tinitigan yan, dalawang yan, tsaka to, magkahawig. Parallel. Okay? Yan. Clear? And we don't stop there. What about income taxation of joint venture, JV? Income taxation of joint venture. What is a joint venture? A joint venture is whereby two or more, they may be corporation, person, partnership, or one person, one individual, another corporation. That's possible as a joint venture then, whereby two entities, two person agree, okay, to contribute, no, in their property only for one purpose, for one activity lang. Yung bang one time, big time lang, one transaction. Kasi mas long term kasi yung mga partnership or corporation. Pero to kung isang transaction lang, yung magpupool sila ng resources nila for this particular project, it may be considered a joint venture. Okay, ngayon. For purpose of income taxation, joint venture will be classified as either joint venture engaged in construction undertaking or joint venture engaged in petroleum or energy exploration with the government. That's the one kind. And the other kind is joint venture others. What do I mean when I say others? Other than this. Other than these two. Yan yung others. Okay? Now, there are 2 points of view to consider here. In the point of view of the joint venture and in the point of view of the joint venturers. JVers, joint venturers. Okay? Why do I need to mention this? Well, because if it is a joint venture engaged in construction undertaking or petroleum or energy exploration with the government, that joint venture is exempt from income taxation. That is an exempt corporation, exempt entity. But sir, who will pay for the income tax on the income of the joint venture then? If the joint venture was exempt, the joint venturers will report it as their respective gross income from business. i-report yung kanya-kanya ng mga joint venturers in their respective income tax returns. Do you follow? Sir, how about joint venture others? The joint venture others is taxable like a corporation. So therefore, how would the joint venture treat their share in the income of the joint venture taxable like a corporation? Depende. If the joint venturer is an individual, edi balik tayo dun sa depende kung 10%, depende kung 20% or 25%, katulad nung kanina. Or kung ang joint venturer is another corporation, kapag domestic corporation, then it is exempt from income tax. Because dividend from domestic received by another domestic is exempt income. Kung ang joint venturer is resident foreign corporation, exempt income as well. Dividend from domestic received by a resident foreign, exempt income. Pero kapag non-resident foreign corporation, the gross income from all sources within the Philippines, 30%. Hindi na pala 30%. 20. Tama, 30% final tax or 15% under the stock tax sparing rule. So yung tax sparing rule, i-discuss yan pagdating na natin sa corporation. Pag nagpunta na tayo sa nitty-gritty details in the corporation. Okay? So my friends, this concludes our discussion on partnership. Yan, partnership in yung summary. On co-ownership and joint venture. Clear? Yan. Okay? Okay, thank you for your attention, and I will now have